The U.S. Market Update with Money FM 89.3.
Good morning. Welcome to the U.S. Markets Wrap, and we had U.S. stocks rallying sharply overnight with the major benchmarks hitting record highs. And of course, as Donald Trump won the 2024 presidential election, the Dow Jones Industrial Average was up by 3.6%, around 1,508 points to a record high. And the S&P 500 also hitting an all-time high, popping 2.5%. The Nasdaq Composite climbed nearly 3% to a record of its own. For more insights, we are joined by Michelle Schneider. She's the Chief Strategist at Market Gauge Group. Michelle, thanks for joining us today.
Hi, Ryan. How are you?
I'm doing great, Michelle. Great to have you on. Let's unpack what's on the table right now. And of course, it's all about Trump. Walk us through what are some going to be the key takeaways for investors with a second Trump administration.
Well, first off, we have to say that the country, which, as you had mentioned at the top of the show, looked like it was going to be a closer race, really came out strongly in favor of Trump. And the main reason, of course, is from the economic standpoint. And so the perception is that he will cut taxes, he will deregulate, that he's very pro-growth in the U.S. Protectionist is a word you use, but obviously tariffs are something that he's throwing around the table. And that all of this will indeed do not only what it did today with the stock market, but will continue to be very, very good for the market and for the general economy. And of course, oil and gas and energy in general rallied as well, but not solar because they feel that he's not as keen on that. That remains to be seen. So that's really was the backdrop coming in. And if you look at some of the more skeptical sides of this equation, the inflation conversation hasn't necessarily gone away. Initially, it looked like the trade was deflation. Gold went down, silver went down. But we saw a couple of other commodities actually rise and rise substantially. So it's going to be an interesting thing to see how much inflation gets under control under a Trump administration. And, of course, we have the Fed meeting tomorrow, too, which will also be a factor.
Yeah, that Trump effect really playing out in markets, a huge boost to stocks. And of course, interesting to see how long this will take hold, the sustainability of this rally. And you mentioned a couple of things, including how deregulation could be in play for a couple of sectors, including in banking. So you saw banking stocks getting a bit of a boost. And I suppose it helps that the Republicans have won back the Senate.
Yes, and that's another interesting thing, because if you look historically, stocks tend to do better in a divided legislation, and now we have a full red sweep. So that could actually be more of a factor. It remains to be seen. But yes, certainly now, whatever Trump's agenda is will be more readily passed. But we still have two major issues that haven't really been dealt with. And I'm not sure necessarily it'll happen even in the Congress or in the Senate, and that would be extremely high debt and the extreme amount of government spending. And both of those are not only not being addressed, but when Trump is talking about his plans like lowering taxes and getting tariffs in place and bringing reshoring back, we're talking about an issue where we need people to fill those shoes in the labor market. And that means that the immigrants that he wants to now export from the country, deport, I should say, where are we going to get that labor force unless we, of course, raise the wages? So all of this, to me right now, spells the potential of inflation coming back. And even though the yields were up a lot today, which is, I think, was a good sign for the growth stocks, we'll see if the Fed continues to lower here, what that happens, and if the bonds totally scream the other direction, it could actually be a lot more daunting for Trump to accomplish the things he wants to accomplish.
Yeah, Michelle, that's a great point, right? Even though we might get tax cuts benefiting some of these smaller companies, especially in time to come, these costs might go up in terms of labor, in terms of the tariffs, in terms of import costs as well. So we could see inflationary pressures come back in again.
Absolutely, and that's without some of the other factors. China, for example, I had heard through a grapevine that they were waiting for after the U.S. election to do a further stimulus, and I think that they probably will, would be my guess, in which case, of course, China stimulates their economy, means they're going to need more raw material. We still, as far as I know, have a situation in the Middle East with Iran threatening to escalate the war with Israel. We definitely have weather factors. In fact, natural gas went up today because of another hurricane that's coming through this area. And we still could see food prices going up. And then the extreme need to grow AI in data centers, whether it's here or abroad, that's a huge strain on certain commodities like silver and natural gas and water and copper and things like that. So all of this, to me, this was a great one day, and yes, seasonally, the stock market does well anyway after an election. But I would say the opportunities right now would also be in some of the areas that haven't necessarily participated because they thought inflation was over, if that starts to pick up its head again.
Yeah, so we've talked a lot about how we could see inflationary pressures back again. Would that make the Fed think twice later on this week?
Well, they're actually going to make their announcement tomorrow. So I think that they don't want to look politically motivated, right? So they're going to have to do whatever it was that they were planning to do, and the anticipation was that they were going to lower by 25 basis points tomorrow. If they do that, I think you'll see certain areas of the market do well regardless, like the small caps that actually had a much bigger rally today, although still nowhere near all-time highs. And the retail sector, which desperately is looking for lower interest rates because the housing market interest rates have gone way up. The cost of borrowing money is still really high. So it's going to be like a double-edged sword. If the Fed lowers, we'll see maybe some of the internal sectors in the U.S. do better that are interest rate sensitive. But I also think it means that we will see some of these commodities go even higher as a result. And that's what has to be watched. What is going to hurt the consumer more? Higher inflation, if food prices, et cetera, go up, or lower interest rates, which at least eases some of the pressures of borrowing money.
All right. Another place that's interesting to look at is what's playing out for EVs. Even though we had the Republicans come in, at least with Donald Trump winning, Elon Musk could still benefit on that front because he's been quite a close ally to him in the lead-up.
Yes, and that is another interesting sort of conundrum for the EV market because Tesla went up tremendously today. But if you look at some of the other American EV cars, they did not. Rivian went down. I mean, Lucid just has been killed lately. But even General Motors and Ford, they didn't really participate the way Tesla did. So there's a political motivation there, no doubt. But to me, that's not necessarily a bad thing. What it means is that we're not going to see Tesla just dominate completely in the EV market if the EV market is indeed going to come back, which I believe that it will. So that means another potential opportunity, not just in some of the other EV car companies, but in the batteries themselves. There was a big announcement last week about lithium mine in Arizona that we were originally buying most of our lithium from China and from Australia, and this Australian mine now has put in a lot of money along with the U.S. government to mine lithium here for batteries, where they're expecting 230,000 more batteries, lithium batteries, to be in production by 2028. So what does that mean? That means that the U.S. is also looking at an increase in the EV market, which again means solar, and silver and copper and aluminum went screaming higher today, by the way. All these things will be important commodities to keep an eye on.
Yeah, lots of moves in the markets right now as we see the impact, or at least what's been priced in after the Donald Trump win. We've been in conversation with Michelle Schneider. She's the Chief Strategist at Market Gauge Group. Michelle, it's been a pleasure having you on the show. Thanks for your time and insights.
Thank you so much, Ryan. Look forward to seeing you again.
Same here. Stay Money FM 89.